Hey, everybody. Welcome back to another episode of the Growth Capital Podcast. I am your host, Justin Dixon, and today we've got Alex Harmsen on the podcast. He is the founder and CEO of PortfolioPilot.com, which is an AI financial advisor. He started the business about 3 years ago. They already have $30 billion in assets under management. And they've got over 30,000 users. It's kind of an interesting story because he started this business kind of as an accident. He had built and sold a business previously, and he was really looking for a way to manage his own wealth. And instead of giving his money to a wealth advisor and paying the 1% fees and management fees, et cetera, he decided to kind of build his own AI advisor. And as he started to get some traction, some people that he knew saw it and said, hey, instead of me hoarding this as my own tool, why not sell it and allow other people to benefit from it as well. So really cool episode because we talk a lot about AI. We talk a lot about how this business is a little bit different than his previous business from a people and a management perspective. So I think you'll get a lot out of this episode. So let's get Alex on the pod. Interested in hearing conversations with private equity leaders, CEOs of private equity-backed companies, and startup entrepreneurs where they share their stories about their career journeys, starting, investing in, and scaling successful businesses, and the important role that having the right talent plays in building a successful business, then you are in the right place. Welcome back to another episode of the Growth Capital Podcast. Here's your host, Justin Dixon. All right, Alexander, welcome to the podcast. Thanks for being on.
Thanks so much for having me, Justin. Happy to be here.
Awesome. Well, let's jump right in. Maybe share a little bit about who you are, where you are, and what you're up to right now.
I'm in the Bay Area, San Francisco Bay Area on the West Coast, and running a company called PortfolioPilot.com. We've built an AI financial advisor. We're up to about $30 billion of assets on the platform, 30,000 users, and it's been a wild ride, over the last three and bit of years. And then after that, before that, I ran an AI company for 7 years. Before everyone started talking about AI and before all the recent hype, sold that in 2021. And, that's what let me start the new business.
Got it. Well, let's talk a little about Portfolio Pilot. So maybe give a little bit of more context on what it is and how you help investors and what the model is.
So it's as simple as going to PortfolioPilot.com, signing up, 10 onboarding questions to get to know you and to personalize your profile, and then import an account, screenshot, upload. We'll grade your portfolio, and then you can connect more of your net worth, everything from real estate to stock options, cash accounts, 401ks, 529s. You can run long-term scenario models and think about thousands of simulations about what might happen with life events and marriage, divorce, and kids and tuition and a whole bunch of different assumptions. And then we'll score your investment situation. And then if you want to, all of that's free. If you want to pay for it, we actually let you upgrade to a gold plan to get real fiduciary financial advice, all from our proprietary AI system. And so it's all fully automated, no humans in the loop. We're trying to reduce a lot of the bias and conflicts of interest that you might see, and obviously make it a lot more affordable. A lot of people that we've talked to over the years spend thousands, maybe tens of thousands of dollars in human financial advisor fees, management fees, and we're bringing it down to just $20 a month.
And I guess as somebody that has knows a lot of financial advisors, has worked with financial and wealth advisors, have you done some type of a side-by-side comparison of, hey, this portfolio was run by a human wealth advisor, and then the same thing was done with your AI driven or AI only, I guess, kind of advice, and was one better or worse outside of the fee structure, obviously, because that would
when fees play a huge role. Right?
Yeah.
If we're talking about 1% fee every single year, that's an absolutely massive drag, over the course of 30, 40 years, saving up to retirement. Part of it, one of the huge differentiators between us and the human. So the short answer is yes, we're constantly benchmarking in comparison. And we've actually won international forecasting competitions for security forecasting. And so feel very good about that. The second part is that we are not managing people's portfolios. And so if you want a second opinion on your financial advisor, you can use PortfolioPilot. You can simply plug in the numbers and get advice, and then you decide whether to act on that or not. And part of it is, you should sell this stock and you should buy this stock, or you should sell this fund and you should buy this fund. You can get very specific personalized investing advice like that, but it goes way beyond that. It's looking at your tax situation and giving very specific suggestions on how you can improve your tax situation, pay less in taxes. It's looking at the fees you pay, advisor fees, management fees, individual fund fees. It's looking at estate planning. There's a difference between a living will and testament, living will and a last will and testament, and a healthcare directive, and thinking about trusts and guardianship for kids. And there's a huge other elements of this, of just downside protection and portfolio efficiency. And it's not just one separately managed accounts that you give to a robo-advisor. It's everything. How do I think about the stuff that I own in my investment accounts, given the fact that I own a house? If I work in tech, should I be more or less invested in tech? That's actually a pretty important consideration, right? Because you're much more likely to lose your job if there's a tech crash. And so you won't want your portfolio to go down and lose your job at the same time, right? Double whammy there. So if we're thinking about downside protection, we're thinking about inflation exposure and changing oil prices. And, there's 1,000 things that you might consider if you were doing this full time. There's 1,000 different individual preferences and things that matter in your specific situation. And so this sort of traditional, one fund for everybody model, or, it's personalized because we know if you're moderately aggressive or very aggressive, we've thrown that out the window and basically redesigned that from the ground up to meet you where you are and then nudge you in the right direction. And so you can think about, our advisor as truly an advisor, not a money manager, but a coach for your financial life that helps you get a little bit better, feel a little bit more confident every single day. And originally it was just for me, right? Basically, I sold my previous company. I was talking to financial advisors, wealth managers, private bankers. I think I ended up on some list at some point because I started getting calls every single day. And I just couldn't stomach the idea of giving someone 1%, not related to performance in any way. They would just take it and manage it because they were the quote unquote experts. And I felt like I was talking to lots of salespeople, and I wanted to not. There's 1,001 trading tools, but I didn't want to do that either. I wanted something in between that was sort of guide me proactively. And that thing that I built for myself has sort of just snowballed over the last 3 years into where we're at right now with PortfolioPilot.
Got it. Well, I want to learn about the evolution of your journey and all that, but just so I can understand a little bit more. So you're not actually kind of taking over the funds, right? You connect kind of your financial tools, whether it's like a Robinhood or a Fidelity or whatever the accounts are, so it can see kind of what you have, where you have it, and then obviously you can ask it questions like, hey, if I invested more in this and that, and so essentially it's almost just giving you advice based on the information that you provide it versus doing the action that it is advising, right? So it's not going to move your money for you. You still have to push the buttons, but it's really just giving you the advice or running scenarios and things like that. Is that a simplified version?
Yeah, exactly. We'll do 95% of the work for you.
Got it.
And so you connect your different accounts, you upload screenshots or statements, across everything, right? Investing stuff, 401ks, 529s, but also your cash accounts, your real estate, your stock options, student loans, anything like that. And then we'll give you that full assessment. And then if you want to pay for it, that unlocks the actual fiduciary financial advice, where we'll give very specific suggestions. And then, you can think about it like a menu of optimization suggestions, where you still decide, yes, oh no, this one doesn't really apply to me. And the system actually learns from you, right? The more you ignore, kind of like swiping left or right? The system starts to recognize your preferences. And serves up better and better suggestions.
Got it. Interesting. I will definitely have to check it out a little bit more. Especially, you said it's about $20 a month for kind of the paid version. Seems
Exactly.
like a very low cost way to get some advice. I
Yeah,
guess,
we want
how
to
do
make it very accessible, right? I think that's the promise of AI these days, right?
Yeah.
Being able to take some expert, some sort of expertise and then contextualizing it to your specific situation and, adding the expert opinion, advice into your specific situation. Never really been possible until the last couple of years.
Yeah. And are you leveraging the large language models that are out there? And if so, how do you minimize any hallucinations or any, of it kind of taking in any bad information, which would then, allow it to or cause it to provide bad advice?
Yeah. So the company is registered investment advisor with the SEC. And so we have a massive compliance program. As part of that compliance program, even in conversations with, OpenAI and other model providers, they've specifically said that we should not generate advice from the LLMs itself. That could be really problematic.
Yeah.
And so we've basically built this proprietary engine. We call it the Economic Insights Engine. There's a portfolio management system attached to that. Sort of this hybrid AI system between traditional hedge fund inspired portfolio management tools combined with multivariate machine learning forecasting models, machine learning based recommendation systems. There's a portfolio score and auditing system that we use to be able to defend the advice that we give. And then there's some LLMs as well that fill in some of the gaps in the models. They help us with sorting data. There's an AI assistant in the product as well that you can activate and use. There are reports that we generate using LLMs. If we pull in screenshots or statements, we're parsing those with LLMs. So you can think about the LLMs as sort of like helping out and making the user experience better. But the advice itself does not come from the LLMs. And I think it would be very difficult actually to create a ChatGPT wrapper company to compete with what we're doing. You could build something that's interesting, maybe in a couple months, but actually getting the regulatory approval, actually getting registered with the SEC as a fiduciary advisor, building a compliance program, that's taken us years at this point. And I like to think that we're doing it right. We're doing it the right way. And I think there's something very similar about sort of the early Coinbase strategy, where there's lots of sketchy exchanges all around the world, about GOX, FTX, you name it. And they said, well, we're going to try to work with the regulators and, do it the right way and try to do everything above board and, stay in, actually domiciling the US. And, ultimately that's proved to be a really, really successful strategy for them. And so I think it's the same thing for us, right? Yeah. Ultimately, the core of everything we do is trust. And so trying to do everything above board in a compliant way. And, we assume that trust compounds over time. And, that ends up letting us build a really massive business.
Yeah. So you said you kind of started this business as kind of like something for you and really wasn't intended to be a business. It was really something for you to manage your wealth since you sold your previous company. I guess at what point did you think, well, I should just sell this or, allow other people to use this tool because it's pretty cool and, I'd rather, help other people versus just, hoard it for myself kind of thing?
I think it's a really interesting framing because it feels like either I keep, I've built some magical thing and either I keep it and hoard it myself. Only I get to use it. I only enrich myself, or I, let other people in and sell it to other people. And I think in reality, it was sort of a side project for me. I sold my previous company. We bought a house in the Bay Area. We started a family. We have 2 kids now, a 4-year-old and a 2.5-year-old. My wife runs a startup. It was sort of the middle of COVID. I was really interested in starting something new. I'm relatively young, and I think there's absolutely a billion-dollar company to be built, uh, and I had probably 50 different startup ideas in 2021. Created stuff. I hadn't coded in probably 5 years. Right, I
Okay.
built all the original AI models for my previous company, Iris Automation. But then, we were hiring people and we ended up raising $30 million and expanded internationally and, a team of 50 people by the time we sold it. And so in year 2 or 3, at some point, the engineering team sits you down and says,
We got
Alex,
this.
yeah, it's actually worse for the company if you keep coding. At this point, just, focus on fundraising and sales and partnerships and product and all the other stuff that you're supposed to do as a CEO. And so it was kind of fun just to get back into coding again and prototyping and using modern tools. And even when friends of mine and people on LinkedIn and investors I was talking to, even then when they were telling me like, hey, there's something really interesting here, I even resisted that and thought, what I should really do is sell to the financial advisors. They would benefit from this. They already have the distribution. Maybe it's easier just to build a B2B business. And human financial advisors loved it, but they loved it because it felt like a sales tool that they could use. They didn't actually want to change, or many of the ones that I talked to didn't really want to change the way they were managing finances. They were actually very happy having one portfolio, 100 clients. You change the portfolio once a quarter in an investment committee meeting, you sign off on it, you update the accounts, send out an email. The idea of managing 100 individual portfolios to the people's actual personal preferences meant that their phones would probably be ringing off the hook and they'd be fielding emails and suddenly they're answering questions about why did you do this and what if we do this? And, there's a tremendous amount of effort getting someone in the door. And then once they're in the door, a lot of financial advisors simply just want to interact with you the least amount they possibly can so they can focus on bringing more clients in the door.
Right.
And it works really well, right? It's a $240 billion industry. There's something that's clearly working. It's bigger than it's ever been in history. But it felt wrong to sell this and have it be used as a sales tool when it felt like there was a huge opportunity actually to just give people back 1% or more of their finances and see that compound. The idea that we could directly help millions, tens of millions of people have a little bit more money in retirement, feel a little bit more confident doing themselves, fight against the, sort of the unnecessary middlemen that tell you, we're the expert, we got it, we'll take it from here. I don't think that's what people really want in 2025. There's also a big generational shift, right? I think it's very common for baby boomers or sort of like the later half of Gen X to just, my dad used a financial advisor, I'm going to use a financial advisor. And I don't know exactly what it is, but over the last 10, 20 years, there's just been a massive generational shift to people saying, I think I can do this myself, right? There's enough tools out there. There's enough knowledge. I can go on Reddit. There's all these self-directed investing platforms that are advertising directly to you, right? Just open up a Schwab account. You can do it. Just open up a Robinhood account.
I was
why
just
not?
Gonna say Robinhood has been the advent of like people wanting to do it themselves, and I think there's some freedom in that. I'm kind of in that. Well, my dad had a financial advisor, so I might as well have one. And I think it is harder to break that mold because it feels comfortable, right? And then it's like, well, if I use somebody else, if I don't use somebody, and then it's my fault if I do something wrong. Right. So if the market goes down or if they pick a bad stock, I can blame somebody. Right. I can blame a financial advisor. It's hard to blame yourself when it's like, well, you shouldn't have bought that, or you should have got out, a month ago or whatever. So I
I
guess
think so,
where,
especially if you're married, if there's another person that you're accountable to.
yeah,
I think this is the big gap in the market, right? I think truly there's so much, billions of dollars of advertising over the last 10 years that's gone into you can be a self-directed investor. And what people really want is sort of that they want an external opinion
yeah,
just to feel a little bit more confident, just to have an outside check. And so for many people, we're simply just a second opinion, right? It
yeah,
feels very reasonable. If you get some medical advice, you go seek a second opinion. But it's a very uncommon thing in financial advice.
yeah,
My financial advisor said this, but let me get a second opinion just to see if that all checks out. Not because I don't trust them necessarily, or because I think there's conflicts of interest or anything like that. But why not? It's so important. It's
yeah,
all my money.
right,
I need this in retirement. I need this to grow, and the difference between a 5% return every year and a 6% return and a 7% return is, hundreds of thousands or maybe millions of dollars difference in retirement.
yeah. Well, and you've priced it at a price point that is, it can be, even if you have a wealth advisor, you could sign up for this and double check the math, right? Theoretically, say, hey, here's something that I learned on PortfolioPilot, and what about this? And you can still let them and pay them their 1% fee, but at least you may feel more comfortable in that environment, which I think is interesting.
Which I would be very happy with as well, right?
Yeah.
Even if we are simply just the second opinion, and the financial advisors are still getting their 1%, if it lets individuals ask slightly better questions in those yearly check-in meetings, if it gives them a little bit more confidence to push back and say, I don't know about that, or if it lets them ask the right questions, very comfortable with that being sort of our legacy impacts on society as well.
Yeah. So how big is the business? I know you said you've got 30 billion in assets, 30,000 users. You're about 3 years old, so pretty synergistic on the threes there. How many people do you have? I'm curious because it's an AI native platform. It's obviously kind of started in an AI environment. So how many other humans, have you worked with? Because it sounds like you kind of coded this yourself. I'm just curious if you're
there's 9 of us on the team right now.
Okay.
And so sort of split between engineering and marketing, and heavily AI forward and everything that we do, and tools throughout the stack that we use, and the tools that we use for marketing and whatnot. I think probably at this point we're operating with about the same output as where we were with Iris Automation when we were a 25-person team.
Yeah.
And we're fully remote, globally distributed. I like to think I'm a better CEO and boss than I was before, and I've better management skills. But in reality, the AI tools that have come out over the last couple of years have been such an increase in efficiency, productivity. I think the team is able to focus on more interesting stuff as well. It's just like a lot of the mundane stuff just gets automated away. And so I think the team is more excited, more connected than ever before. And I think, every single week someone posts at least one new tool in a random channel that gets picked up, and it, makes the company, a couple % more efficient. Every single week, right? I think potentially one of the greatest strengths here for any new startup business is simply just velocity.
Yeah.
How quickly can we get feedback from users? How quickly then can we turn that around and put it into the product? Religiously, every single Monday evening, we do a release. Monday at midnight, new release, no matter what. 2.5 years straight, haven't missed a single Monday. And, we have 1 week sprints. We plan out what we're going to do on Tuesday morning. And then everyone is expected to get their stuff done by 9 a.m. the next Monday morning. And then we push out a release that evening after a bit of testing. And users see that. I think we get a lot more feedback. We get a lot more passionate users because they feel like they're part of something that is growing and improving. And, when they give feedback, it doesn't just go into the void.
Yeah.
They can actually see that, next week that piece of feedback gets included, or a bug gets fixed, or, an extra feature or component gets added. I think that's a huge part of growing businesses,
Yeah.
software companies, products in particular these days.
I wanted to touch on that because obviously you've built, two businesses, kind of, I guess, two AI businesses, it seems like, and sold one even kind of before AI was cool, or even AI was AI. So, talking to the startup people that are listening to this, that maybe they are a founder and they're scratching their head on, because there are so many tools out there to use, like what ones should I try, or which ones are kind of the top ones that they should use. Like, what's some advice you would give them? And, if you're willing to do it, what are some tools that you've used that have kind of exponentially got you scale and growth and speed? Because, there's so many out there that sometimes it's like, analysis paralysis.
I think there's two different ways to think about answering that question. One way is just like rattle off our stack and the tools that we use, and maybe that's useful, and like maybe that's what people are looking for. But I think the real answer is that, because we're using tools doesn't mean that you should be using those tools.
Right.
And I think in reality, it's fun to play with all kinds of new AI tools. We all do it. I can't help myself but do it. It's a brave new world, and every week there's something exciting and something new. But in reality, we're trying to get SEO off the ground. We just launched a couple 100,000 programmatically generated SEO pages, and we're working on technical SEO and cross-linking. And so these days I'm looking for AI SEO tools. And, I'm going out into the world specifically looking for tools that might help me with that. Part of it is simply ChatGPT that, writes the version of some articles for us. But that's the start of it. If we're thinking about just like the core models like that, LLMs, then we'll just try, Grok, Claude, ChatGPT, and Gemini, and see which one produces, the best one. I oftentimes just have multiple tabs open. If I'm brainstorming in particular, or if I'm prototyping something, I'll, take my one prompt and just copy and paste it into a couple different tools to look at the results. Sometimes, they finish at different speeds. One, comes up with a different result than the other. Especially in some sort of brainstorming process, it's useful to get a bunch of different results. For prototyping and for product design, I'm constantly trying to figure out, how me and our designer on our team, how do we, how do we help the engineering team not be the bottleneck anymore, right? Because the engineering team, it feels like just building stuff is oftentimes the bottleneck. And so one of the big questions that I'm constantly asking the engineering team is like, how can we accelerate what you're doing? Cursor is part of it, but it seems like one of the things that's very problematic with the engineering team that slows them down is all the review cycles. And so, why is that the case? I mean, this is simply just yesterday, big meeting about this. The engineering team feels like they spend, they have to code stuff 4 times.
Yeah.
The same thing. Why didn't you just give us the design that worked perfectly the first time around? And the reason is because it's very difficult to know exactly the interactions until you see it in front of you. And there's, you end up producing a design, but you don't think about all the different edge cases. And so, we use V0 and we use magic patterns to be able to now generate full designs, from the design side, fully interactive designs. It lets us play with all the different edge cases before we even send it to the engineering team. And now the big question is, how do we set up these tools in the right way so the engineering team doesn't even need to translate that into Cursor? Because they're oftentimes now copy and pasting from V0 into Cursor, use our components here, and here. And it doesn't feel that far away from having this truly integrated solution where suddenly design is the bottleneck.
Mm.
And we can't design stuff fast enough, for the engineering team to implement. If design becomes the bottleneck, then what we really need, then there's like probably a whole bunch of low-hanging fruit to increase the speed of design. And once that's not the bottleneck anymore, then it's probably just feedback from customers. Yeah. And so the idea that I could simply just spend my whole day in feedback sessions with customers, using the product, seeing how people use the product, and just pushing a nonstop stream of new features, fixes, improvements, problems to this machine. Like, we are less than a year away from that, I think, where the feedback engine actually becomes limiting for the business, where basically we run out of ideas on how to improve the product.
Right. That's interesting. Yeah, because then you're reliant on new customers to use it and then tell you, hey, I'd like this. And it's like, cool, done. And then that's
like true alignment for the business, right? Yeah. Like, if my main bottleneck as CEO is also focused on, just trying to build the best possible product for the users and figuring out, what stops us currently being an incredible product, rather than hiring engineers or reviewing designs or all the other stuff you do as a startup founder, right?
Right. Yeah. Well, interesting. Well, I'm curious. I got a couple more questions here, but we're recording this in kind of late July 2025. If we jumped on a podcast 12 months from now, like what's maybe 1, 2, 3 things that you would love to have happen in those 12 months that would make the podcast super exciting?
I think one of the biggest things that we're figuring out right now, feels like the product is really solid, and I'm excited about that. We have all our ducks in a row, compliance-wise and legal. I feel like we have a solid feedback machine here, and the product keeps getting better and better and better. And we run A/B tests, and so I'm not really worried about that piece of the product, right? Like, it'll iteratively get better every single week. The big thing I think that we need to nail is distribution. Mm. And so right now we're doing 10 different experiments in 10 different channels, figuring out how to reach people at scale. And so my guess is that, what I need to have happen, over the next year is one of those channels needs to work really, really well. Could be our partnerships, could be podcasts, could be webinars, it could be, just lots and lots of little social announcements. It could be some viral sharing factor within the product. It could be that word of mouth gets so good. Media, meta ads finally breaks, and becomes profitable. I don't know exactly what it is. Realistically, we'll land on a couple different channels that will start really scaling up. But I think as soon as we really nail that, then we're very quickly at $100 billion of assets on the platform, 100,000 users. I think at that point, it's a lot of just execution and just like keeping the wheels on the machine. And I've done that before. I feel very confident with that. I feel like there's, a fair amount of investors that I'm speaking to that are excited about, like, feels like there's inevitably going to be some AI financial advisor that breaks through out of the noise and is like the obvious next, category creation moment. And I'm super biased. I think that's going to be us.
Yeah.
But I think that, a year from now, we are like out of novelty and into just like truly scaling. And, we're past 0 to 1 on every core part of the business.
Got it. No, it makes sense. And that's a lot to work on in a year, but it sounds like you've got a lot of ambition to do that. So I appreciate your time today, Alex. And I want to kind of wrap our episode like I do every episode with a 3-pack of questions here. So first question here, what's an influential book or podcast that you would recommend our listeners to check out?
I love Purple Cow.
Okay.
It's have you heard of this book?
I have not.
It's like a marketing, design, product book. It's very short, and basically just says like, look, we did TV advertising for a long, long time, and it just doesn't work anymore. Like at this point, the product is everything, and the product needs to stand out. If you were doing a road trip across America, you would see a lot of cows.
Yeah.
And the one that would stick with you would be the one painted purple cow in some field in the middle of Arkansas. You would talk about that for months afterwards. Every time the road trip came up, that purple cow would come up. And it's so simple, right? That idea that like you need to do something to stand out. And there's simply just a sea of noise, and your product will get faded into the noise unless you do something truly different. And once you figure out that one thing you do that's truly different, then marketing, product, and design just fall into place, and the rest should take care of itself.
Love it.
Simple concept, difficult to execute, but I think this book does a really good job sort of just knocking you into like a different mode of thinking that's very relevant for today's day and age.
Got it. Love it. I definitely will have to check that one out. Second question here. What is your favorite thing to do outside of work?
I have 2 kids, and to be honest, my life is basically just working kids at this point. And they're 4, 2.5, 2 boys, super cute. They have their own personalities and attitudes at this point. And there's something amazing about just playing with them, building Lego, going for hikes, exploring the world. Can't get enough of that.
Awesome. Very cool. Final question, and this may be harder because you said you really just work and play with the kids, but any favorite vacation spots when you have time to take one?
I feel like I've traveled a lot over my life. Like I lived in India for a little bit. I've been, a number of places in Asia and New Zealand and all, I was born in Holland. I lived in Canada for a long time. And I've been all over the U.S. and Mexico. And one thing, I was speaking to a friend of mine from Lisbon recently, and you reminded me of just a small trip as part of this larger Euro trip that I took to Lisbon. And there's something absolutely beautiful about the city and the bridge over this massive canyon and water, and then like just a row of port wineries.
Okay.
And like, I think I could spend days simply just like doing winery tours and drinking ports, above this, river, seeing the city across the canyon. I don't know why, but, I haven't thought about that in a long time, but this, conversation recently with my friend, brought me back to that time. And I feel like it's not a very common vacation spot. People don't talk about it all that often. And so
love it.
That's my pick.
Yeah, no, I definitely will have to check that out. Sounds like a lovely time. My wife and I spent some time in Italy, so definitely can get on the board of doing winery tours and seeing great scenery for sure. Well, Alex, man, it's been awesome to learn about you and your business and your journey. I guess if people want to reach out and connect with you, learn more about your business, or maybe pick your brain about some of those AI tools that you're using, like what's the best way to connect with you?
Reach out on LinkedIn. I'm on Twitter, Alex Harm. Reach out there, DM me, follow us, PortfolioPilot. Honestly, as you can guess from the podcast, I want nothing more than customer feedback on PortfolioPilot. And so if you're willing to sign up, I will happily take a call with you. And, you give me feedback, I'll give you some insights. Very happy to do something like that as well. We are simply just trying to make PortfolioPilot a better consumer app that's more insightful, that helps you put more money back into your pocket. Also, maybe I should mention as well, my marketing guy will kill me if I didn't say that, we have a promo code for podcast for a month off of Portfolio Pilot Gold. And so maybe we can include that as well.
It's just the word podcast, huh?
Just podcast. There we go,
Any
Justin.
Caps?
All caps, lowercase.
All caps. Doesn't matter.
It all works. Justin,
awesome.
Thanks so much for having me on.
Yeah, no, it's great to have you. I appreciate it. I hope you found at least one actionable insight from this episode of the Growth Capital Podcast, your one-stop shop for insights from private equity leaders, CEOs, and startup entrepreneurs on starting, investing in, and scaling successful businesses, as well as the role having the right talent plays in growing a successful business. It would be greatly appreciated if you would rate and review this podcast. And if you're watching on YouTube, please like and subscribe and drop us a comment so we can expand the audience of this podcast. Thank you for all your support, and don't forget about upcoming episodes dropping every Tuesday.